Hello everyone, welcome to Just Invest Today. In today's video, we are talking about the Howard Marks interview that he did with William Green. Is the recession coming in 2022 or maybe even 2023? Because so many people are worried about the recession coming. There's so many signs. And in this video, Howard Marks talks with William Green and they talk about how to beat inflation. So if you want to watch the whole interview, I'm going to link it down below, but he gave so many jewels and gems. I'm going to go through it in this video because man, inflation is already at like what, 7%, and it might get out of hand because who knows, man? I feel like the Fed is not even telling us the truth about the real inflation in this market, man. And this can all cause a big recession. In this video, we're gonna talk about it, but before we do, can you please like this video, subscribe to my channel? I'm always providing you guys with so much new content, man. So click that like button, click that subscribe button right now. The first thing Howard Marks actually talks about is that he always gets the question, is this like the 70s? Because during the 70s, inflation was double what it is today, which is actually crazy to think. So he gets this question a lot. Right now, you have to think about what happened and why inflation is higher. He still believes that some of this is due to the supply chain issues and that will fix itself over time. Because remember what happened during the whole pandemic and everything got shut down. And he gives an example of a Toyota that has more than 30,000 parts. And if you don't have a part, what are you going to do? You just have to wait. So there's going to be limited supply and there's going to be such a high demand because people still wanted Toyotas. On top of that, you had a lot of people just getting money, right? So there was just a lot of money floating around in the market because the Fed was giving a lot of relief. People were scamming using all those PPP loans, had all this money to splurge, but there was no supply for that. Still thinks that some of this inflation is still transitory, which is kind of a good sign. On top of that, that pandemic relief is kind of slowing down or it's non-existent anymore. So he thinks it's gonna more stabilize as time goes, but he still believes that there's gonna be high inflation. So we still wanna be able to beat inflation. So we wanna be able to use stocks, real estate, or even fixed income to beat inflation. Because we know the Fed is really not gonna do what it's supposed to do. Back in the 70s, they didn't know how to fix inflation. They were using price controls and all these other elaborate schemes to try to hinder inflation, but it wasn't working. And now we know how to do it. We just have to raise interest rates. But guess what? Do you think the Fed will actually do that to like 3 to 4 to 5%? Can you imagine that? What it would cause in the market? The recession would be upon us if that actually happened. So Howard Marks does talk about 3 ways. So let's get to the first way, fixed income instruments. So when you're talking about fixed income instruments, he suggests that you have more in the floating rate instruments and less of the fixed income. Because when it comes to fixed income, you can't really do much. You don't have any wiggle room for a high interest rate environment. But with the floating rate instrument, you're able to actually raise your prices as rates go up to adjust to the environment, which is amazing. So he wants you to actually get into the more floating rate instruments than the fixed income instruments that have like a baseline. As for all the people using fixed income instruments, next we have real estate, man. And we know the real estate market is going crazy. So if you bought in a healthy market, like a multifamily home, you're gonna be able to raise rents, putting all that onto the customer. So that's gonna be an amazing way to actually beat inflation, but you still have to have real estate in a good market where people are actually willing to pay for those rent prices. Third, we have stocks. If you actually want to beat inflation with stocks, you have to make sure that your stocks, the businesses that you actually own, are actually beating out inflation, 7%. So that's how you have to look at businesses that actually generate free cash flow. So are they beating out inflation with the free cash that the business is producing? So we want higher than 7%. And that's a good thing in this environment because a lot of these businesses that we probably own right now are not producing cash and we don't know how much cash they're going to produce in the future. But if you still have hope on that company that you're purchased that doesn't produce cash now, it's okay because if they're going to produce all that cash in the future, then you're still going to make a killing in the market. But people are so skeptical. You can see that people are selling out of so many companies that are not producing cash because this high inflation environment plus interest rates may be going up. That's why a lot of people are selling these high-flying stocks that sometimes are not producing cash because they want more safety. What comes with more safety is buying companies that you understand, that have a strong competitive advantage, that have really good management, and you can buy at a solid price. The four basics, man. So that's it for this video. Guys, please like it, subscribe to my channel. I'm always producing so much content, man. Peace.